As usual, the US oil commodity is going to be one of the instruments I will be monitoring for this week. And obviously, this is a follow-up detail to my previous analysis. And during the course of last week trading session, we were able to make some profit. So last week was splitted into two phases. As the first phase of last week, we had some selling opportunities which we took advantage of, and the second phase came in for buying opportunities. And to make further clarity into what I'm talking about here, I would like to share with you some key moments that we had during the course of last week. So I shared this commentary during the early hours of Monday where we took advantage of some buying opportunity after price action broke out of that range between the $77.90 and the $76.35 area. So we were thinking that price will continue to the upside here, but unfortunately we were taken out of that position with some profit and if what case scenario break even. Then the key moment for that selling opportunity didn't come until on the 12th, on the 21st, that was Tuesday, where we anticipated we saw this breakdown of that bullish trend line price action drop to the downside. So I shared this on Tuesday morning that a breakdown of the $76.35 level will be giving us a selling opportunity. And if price climbs up to $77.90 area, then we shall be joining a bullish momentum. So we had our orders placed, and what happened afterward was quite interesting as we saw price action do a breakdown of the $76.35. And it was at this point that sellers rode the move all the way down. We saw structures breaking the $76 level, giving us more opportunities to add more position, and we continue to ride the move all the way down and we rode the move down into I think the 74 or $73 area, after which we started seeing traces of bullish momentum. So on Thursday, I identified the structure coupled with that bearish trend line, which I said if price action breaks out of that trend line and above the $74.30 level, we shall be getting out of our sell position and anticipating a bullish opportunity. And this was what happened. I shared this earlier that I said breakout, breakdown, we getting ready to join. And what happened? We had our buy stop order triggered at the breakout of both the trend line and the $74.30 level to signal that buy opportunity. So we were able to rather move all the way up as price action moved about 170 pips in that direction. So this is what we had during the later part of last week. If you do want to have an examination of how we took advantage of this trade, I will be dropping the link in this comment section of this current video for reference purposes. And if you are watching from my YouTube channel, you will be seeing it at the top right hand side of your screen. So now let's go back into the daily time frame. And what I did here was to clean out my chart and identify new technical structures that we want to be using to guide trading activity. Well, the first thing you would observe here on the daily time frame is that price action has actually been bearish since the second half of last year. Price had continued to find lower highs, and as a result of these, I was able to connect the series of lower highs here, which gave us this resultant bearish trend line. However, things got a little bit interesting during the last quarter of last year. As you can see, since the month of September, price appeared to have been consolidating between the $82 level and the $70 area to emphasize the indecision at this particular point in time. However, during the first week of the month of December, we saw buy pressure. This was the lowest point price has ever been in the last year. That is the $70 level. But one peculiar thing about the structure here is that price had continued to find higher lows. And when we connect the series of higher lows here, what we can find here is a temporary bullish trend line, which price action has consistently respected in the last 3 months. So, what this simply tells us is that buyers are really trying to break out of the structure, and as a result of this, we have uniform pivot lows here to signify the intention of the buyers. Now, in addition to this current structure is this key level I was able to identify here at the $76 level. And this key level will be a yardstick for trading activities for us on the US oil in the nearest future. And what this simply means is that if price action continues to trade above the $76 level, I want to be looking out for buying opportunity. And if it so happens that price still trades below the $76 area, then definitely we want to be seeing a breakdown of those bullish trend line to give us a clue that sellers might likely be coming in this market. And if a further breakdown of the $70 area happens, we might be seeing another opportunity to add more position to our existing trade. So, with the situation we have here right now, as price action is back into that key level I just identified here, one thing we want to be doing right now is to scale down to a much lower time frame to see how price action is currently reacting to this level, and at the same time use the market structure we are able to identify there to identify trading opportunity for this week. So in that regard, I will be scaling down to the 4 hours time frame. And on the 4 hours time frame, I was able to identify a simple setup which I think we can use to guide trading activity for this week. Well, if I zoom out, we already know that price action has been consolidating between the $82 level and the $70 area, that is in the last 3 months. Now, if we zoom into what has been happening here in the last 2 to 3 weeks on the US oil, there is something significant that I was able to identify here. And one thing about this structure is that you will see that it has been bearish since the second week of this month. And as a result of this, I was able to identify a bearish range which has been guiding this bearish momentum to the downside. Now, during the course of last week's trading session, we saw the breakdown of the $76 level, which, lucky enough for us, we were able to take advantage of that move that we rolled all the way into the $74 area. Now, something happened around the $74 level, which is a strong psychological area considering the round figure of that price. As you can see, as soon as price got into the $74 level, we started seeing buy pressure come in from that structure. And this led into a situation where price came back into the $76 level with the hopes that price will be respecting that bearish range one more time to incite another wave of bearish momentum. But that did not happen. As you can see here, we saw price drop down with a sharp rejection of somewhere right above the $74 level, price coming back to close above the $76 area, which falls right within the bearish range to give us a signal that there is a strength of buying pressure around this area. As price action was unable to break the previous low here, this is for me a beautiful sign that we might be seeing a bullish momentum for this week. And as a result of this, I connected the series of lower highs here, which has given me this temporary bullish trend line, which I will definitely be using to guide trading activity for this week. So what this simply means is that if price action continues to trade above that bullish trend line, I will be comfortable in a buy position on the US oil. Now, with the situation of things right now, you would agree with me that price action is at a critical confluence in the market where price action appeared to have broken above the $76 level and at the same time broken out of that bearish trend line, which has been guiding sudden pressure in the last 2 weeks. Now, with the situation of things now, price action is currently trading both above the $76 level and the bearish trend line here to signal the possible reversal pattern gradually coming in this market. So at this point, I will be advising that we are going to be buying the US oil as long as price trades above the $76 area. And you all know from a technical standpoint, whenever we have a breakout of structure, there is a likelihood that at one point in time, there will be traces of a retracement back into the structure, transition into buy pressure above that level to incite another wave of bullish momentum. So to buy the US oil this week, I want to be positioning myself above the $76 area to buy. I'll be pausing the video at this point and be rest assured that I will be jumping in the comment section to give you an update on what my expectations are after monitoring how participants in this market will be reacting to this area during the early hours of the week. I hope this video has been of immense help in making your personal decision on the US oil, and if it did, kindly support this project by clicking the like button. You would also want to follow me on my TradingView platform at Darksherry, spelled DARCSHERRY, so that you can be part of the daily commentaries I normally share in the comment section of all of my videos. Thank you for watching this video, and I look forward to seeing you right in the comment section during the early hours of the new week as we get prepared for the new week. Do have a wonderful evening, everyone. Bye bye.